Hey, it's Nicole Johnson with CoVision Real Estate Group, and today's frequently asked question about mortgage notes is what is seller financing? So most people think of when somebody wants to get a loan to buy a property, they think of going to a big banking institution, so Wells Fargo, Citibank, credit unions, a mortgage broker. So you think of these things in order to get a loan in order to buy a property. What a seller finance is typically a borrower goes directly to the seller and says, hey, I want to buy your land. I either don't want to go through Wells Fargo or a banking institution, or one or two, I can't qualify for that type of loan because maybe the loan is too small of an amount, or maybe their credit's bad, or they don't have the best employment history. They might be self-employed. So they're like, hey, I really want to buy this piece of land from you, but I can't get traditional financing, or I don't want to get traditional financing from a lending institution. The seller will be like, okay, I'll sell you this piece of land, and I'll do a seller finance on it. So I will extend you the money in order to buy it. So they agree to the purchase price amount, and maybe that borrower puts 10% down, maybe they put 5% down, maybe they put 20% down. So they agree to, so say the purchase price is 100,000, and they say, okay, I want 10% down. So they're actually going to pay the seller $10,000 because that's their 10,000, that's their 10% down. So they give them $10,000. So now they create a mortgage between the seller and the buyer for the $90,000 balance. And then between the seller and the new borrower, they set the interest rate. So that seller might say, okay, I'll give you seller financing, but it's going to be at 10% interest rate, and I'll give it to you for a 15-year note. No prepayment penalties. You have 15 years to pay that back to me at a 10% interest rate, and you have to put 10% down. So the borrower says, okay, I can't get a loan through Wells Fargo, so I know my interest rates are probably going to be a little bit higher or a little bit more aggressive. And so, okay, that works for me. So then the seller, he gets that $10,000 down because that was part of the agreement. So the borrower brings $10,000 cash to the table, gives it to the seller, and then a mortgage gets created and a promissory note promising the borrower is going to pay back that money to the seller. So then the agreed amount terms are, again, remember, a $90,000 loan with a 10% interest rate for 15 years. And so that gets recorded against the property. The new owner now takes title to the property. So that seller no longer owns the property, they own the piece of paper recorded against the property. So title transfers into the borrower's name, but now the seller owns the piece of paper, they own the mortgage on the property, and now the borrower owns the property. So now that borrower for the next 15 years is going to be making payments to that seller as a seller finance note. Now what that seller can do is say, okay, I actually want my $90,000 back sooner than the 15 years. And so they reach out to somebody like Marcus and I and say, hey, I have this mortgage note. It has 12 years left on this 15-year note. The borrower's been paying for 3 years. He's a great borrower, but I'm ready to cash out. So we'll buy his note. And then now that borrower gets a letter in the mail that says, hey, your loan has been sold. And now that borrower will start making payments to us as the new owners of that note. So that is a full circle explanation of how a seller finance note is created and how we step in and can buy that and become the new owners of that mortgage note. So I hope that helps in a nutshell. That just gives you a snapshot of what it's like behind the scenes of what it actually means to invest in mortgage notes. It's been a great pathway for us, and we're enjoying sharing that with other people to help them find new ways to diversify their investment portfolio. So if this sounds like something you're interested in, feel free to reach out and give me a call, or text me, or DM me, or send me an email. All of those are great. So hope to hear from you. Thanks so much for watching. Bye.